right, so now let's welcome Jimmy Ku. He's gonna give us a quick presentation about fundraising.
I'm gonna first talk a little bit about how to raise money. I mean, they were talking about it multiple times, right? And then I'm gonna talk a little bit about kind of the different types of fundraising, seed, Series A, and then I know we're gonna have a chat overall. So first, how do you do fundraising the easy way? So are you ready? Really, there's no easy way. The reality is fundraising is quite difficult. It's kind of monotonous. You're gonna have to go out there. You're gonna have to pitch over and over and over again, and it's not a lot of fun, to be honest. People don't really like doing that. So why do I actually like doing that? That's kind of what my specialty is, and why even listen to me? Like, why am I up here talking? I've basically helped startups raise over $500 million over the last 6 years. A lot of that's just connecting the right founders with the right investors. I'm a venture partner at 3 different firms right now. So 10X Capital, which is one of the most active VC firms in the US. Moats Ventures focuses on AI and healthcare, and then Millennia Capital focuses on AI. So a lot of different AI type investments, which we'll talk a lot more about later. I'm an angel investor in about 50 companies myself, and then I'm a mentor for Techstars and Founders Institute, and been a mentor for others as well. But the main thing is I just love connecting people. So over the years, I found that if you have the right investor with the right founder, then good things can happen. And I like to be the connector that helps facilitate that. And that's kind of how I helped those companies raise capital. One of the questions that comes up generally is the basics. When you get started, are you looking for a seed round? Are you looking for a Series A? Are you looking for a pre-seed? How much are you looking for? What type of investment vehicle are you going to have? What are the terms? There's just a bunch of stuff there. On a high level, if you're talking about kind of just getting started, you haven't really gotten a lot yet, usually that's either a pre-seed or a seed. So you're raising a couple $100,000, a couple million, it gets started, you build the product, and then you can start showcasing traction. If you have a little bit of traction and you want a round that's actually priced, that's when you can get to like a Series A, Series B. That's when they are going to evaluate your business based on how it's doing, right? How much revenue are you generating? How many users? How are you monetizing it? What's your retention? All these different kind of factors. When you're fundraising for kind of the earlier stages, a lot of it is hype and story. Who are you? What's your background? How smart am I? Am I going to Stanford, Berkeley, or UCSD? Those types of things are what investors are really looking for because you don't really have too much traction yet. Once you start getting traction, then it's about the metrics. You can be really smart, but if your business is failing, doesn't really matter. Your business is still failing, right? So that's kind of the 2 main ones. I'll show kind of the types of stories that work better with those, and that's really kind of the core of what I want to talk about is storytelling. Because at the end of the day, 99% of what's important is you actually building the startup. So this is the question that was asked, right? So what's the unique IP? Well, if I have traction, you can't take that away from me. If I have the data, if I have the users, if I have that stickiness, then that's something that can't be easily replicated with a couple hours using ChatGPT. But when you go to an investor, the narrative is really what's gonna get you the money. Because you can have a great business, and if you don't know how to tell your story, no one's gonna invest in it. And that's just the reality. That happens all the time. There are great businesses that are generating revenue, they have users, but the person who's going out there and fundraising just can't tell the story. And so I'm really here to help you with that like 1%, which is to talk about what's a good story. So the basic story, just to get started, especially for a seed one, I mentioned seed one, you don't have traction yet. You're just getting started, you're just building a product. How do you get someone excited and interested about what you're building? Well, the easiest way is here's a problem I'm trying to solve, here's my solution, and here's why I'm the right person. If you can kind of understand the problem, then I've at least gotten your attention. If you understand the solution and think that it's a pretty good solution, I've got your interest in kind of how you're solving that problem. And if I'm the right person, then you won't go out and tell someone else to build the same product, right? So that's how you're gonna get them to really invest in in your product or your company. So here's an example of me telling a story. The problem is there's a lot of crime, right? Like San Francisco a couple years back, right? The solution is Batman. And, oops, this is actually the one before that. And his superpower, he's just very, very, very rich, right? So basically, you're just kind of telling the flow. Now, there's, of course, more that goes into it. But if I can understand the problem, crime is terrible. I can understand the solution, a superhero. And I can understand why you, Batman, the billionaire, with all those resources, are uniquely ready and the best person to go solve this problem, then I'm interested. I'm interested to ask you more. I'm interested to learn more. So here's another one. She keeps losing her memory, and that's the problem. She can't remember anything past the day. The solution is this video that tells you everything that's happened since she's forgotten it. I don't know if you guys have seen the movie, but this is a movie. You guys definitely haven't seen it. If you haven't seen Game of Thrones, you haven't seen that. And the superpower is he just does this every single day. He updates it, he adds more information. And so you're showcasing why you are uniquely the right person to go build and go solve this major problem. Now, what I said earlier about the seed is I don't have a product yet. Right? Usually I'm still building it. So I have to talk about the product, the problem, the solution, and how I'm the right person. But if I've built the product and I've gotten, so let's say Beatify now has 100 artists and 1 million active users. Now I have some metrics that I can go after. And when I'm telling the story, I can tell it a little bit differently. So for a good Series A narrative, one of the things you can do is you can talk about how the world is changing. So the main thing is, the world right now, this is how the world is right now. Something is going to be changing it that will never get us back to the world as it was. Very simple example, AI, right? AI is out now. It's available, people are using it all the time. Are we ever going to go back to a world where people have no idea about the capabilities of AI and it doesn't exist? No, it's not gonna happen anymore. So in this new world, what do I have that shows that in this new world, I'm indispensable and the right product or the team or the company to take over this new world that we live in? So the world as it was is we've got this nerd, we've got this world with all kinds of different problems. He gets bitten by a spider. Now the whole world has changed, right? Because we've got now Spider-Man. And the world's never going to be the same ever again. Completely different world that we live in, and why would you want to go live in a world without Spider-Man? Okay, so there's a couple of key things. I'd like to say, and I tell kind of companies that I work with the same thing over and over. Your pitch is basically like a mixtape or your greatest hits. It's like the main things that are gonna get them to want to invest in you, right? What are the key, core, highest value things that they listen to and go, okay, I'm really interested. It's kind of like dating as well. Like you're not really going into a business case. You're not going into every single thing about the business. They don't care. The investor doesn't care. What you need to do is, this is the first meeting. I got to get you interested in what I'm working on. So how do I tell you about the things that are super compelling and interesting? The first is I got to capture your attention. This is from another film. He starts out with this guy with a gun and you're like, what is going on? I don't really understand, but I'm interested. Now I want to know what this movie's all about. Capture their attention in the very, very beginning. That's the first thing. Everyone's getting tired and we got long days and we got a lot going on. Think about how many people that investor has listened to that day already. He's going to zone out in about a minute, maybe less. And so if you didn't capture his attention, he's already forgotten about you and he's not listening anymore. Once you captured his attention, then this is a famous saying, which is basically always be closing. When you are the founder and you're pitching, you're basically a salesperson. You're pitching your company. So I mentioned earlier, it's all about the highest value points. Every single point, every single slide, everything you say has to be something that shows how valuable your startup is and why they need to invest, because that's what we're talking about, right? Next, just keep it pretty simple. At the end of the day, you guys are really, really smart. If you start getting into the nitty-gritty, again, their eyes glaze over. It's not important. I'm here to tell you how you're going to make money. I'm going to keep it really simple. I'm going to solve this problem. Here's my product, and here's me, right? Keep it simple. But you also, because if you're talking about venture capital, they're going to think about how are they going to make money, right? At the end of the day, if I'm going to get 2, 3x returns, I can play the market and I can do a whole lot of things, right? I don't really need to invest in venture. Venture is very, very risky. 80%, 90% of these startups are going to fail. Why am I investing in a bunch of startups? I'm investing because I believe that at some point they will become huge companies that go public. That my returns are crazy, right? You can see some of the returns of people who were early investors in Figma, or early investors in Uber, early investors in some of these companies that have gone public. It's I think the Figma numbers, Sequoia, Kleiner, like these guys, they are returning their entire fund 17 times with one investment. That's what venture is. Venture wants you to swing for the fences, go for that grand slam, and have a really big vision, because if you achieve your vision, for example, Uber, like you've completely fundamentally changed the world. And when that happens, there are huge returns that are available. And I want to invest in that, right? I want to invest in that future. I don't want to invest in something that's just going to be generating a little bit of money, but it doesn't do anything. Because also you got to think about, the investor only makes money when there's a huge liquidity event, right? An acquisition, public markets, something big. So if you don't have a big vision, they're not going to be interested. The last thing is you do need to practice. You want to be very, very good and ready when you're having those conversations. The reality is you're going to be saying your pitch over and over and over and over again. It gets really boring to you, but the person across from you, it's the first time they've ever heard it. So practice, be prepared, be ready, and then that's when the money comes in and you'll get your funding and you'll be ready to go building your product, and you'll be super successful, and you'll have your billions in no time. All right, so that's just a couple quick things. I'm also happy to answer any questions, but I know we got a fireside chat. Actually, before we start, any questions? I just went over a few simple things here.
One of the things I've seen in venture is the ideas are awesome, but they really invest in people. If they see someone who they think is going to run through technical walls and pivot no matter what it takes to build a product, and you look at Slack. Slack was a gaming company.
It was?
They built this thing that was pretty cool internally, and they realized this is the product.
His investors actually told him, don't give up, just use it. I mean, I don't want the money back. Go ahead and build something.
But so when you talk about like the things about what's important, like, I think one thing that's really important is like these guys today. I've actually seen some polish with them standing in front of a bunch of people like this and having some confidence and be able to answer questions. That's the type of stuff that VCs want to see. They want to see you have some balls, you have some spine, you have the ability to I'm gonna answer questions from a bunch of really tough people, because they want to see someone who's gonna run through walls and make stuff happen. So I think all the stuff you brought out is really good, but at the end of the day, they also still, if you have a great idea, if you are walking up there insecure and not confident, but really smart, but insecure and not confident, they're not gonna invest.
Yeah, it's the third point actually, which is ultimately it's you. So here's a sad fact. Whatever you think is an incredible idea that nobody has thought of, other people have thought of. Like that's just the reality, right? Facebook wasn't the only social network. Google wasn't the only search engine. And a lot of these things aren't the only anythings, quite frankly. When you're building it, there's going to be other people building it. So the main differentiator, to your point, really is about the person who's building it. And here's another thing. If a VC really likes the problem and your solution, but they just don't think you're the right one, they're going to fund someone else. They will. It's not going to be you. They don't want to fund you. And that's the problem. So to your point, you having the polish, you having the balls to speak in front of the people, you're showing that you're the right person to back, right? Because a lot of these products, there's so many others that failed. And they failed because of the team behind it. And the VC is absolutely looking at the team behind it. And when there's absence of any traction, the team is the key thing. Because the story you told about Slack, that's been a story of a lot of companies, right? Twitter didn't start out as Twitter, and several other companies. It was the team that found a way to create a product, that found something, and just built it. So absolutely, I agree with you. In fact, that's probably the main thing. Like the problem and the solution may not even be relevant if we end up building something completely different. But regardless, if I back something, I back that team. Because I'm going to make sure that team is going to build something, probably the problem and solution we talked about, but maybe not. It's possible they change the product, right? And if they do, I'm still backing the person. Yeah, you're right. Go ahead.
Yeah, so I agree with like a lot of the stuff that you said. Great presentation. I also want to add that there's some people might know this, but there is two ways, main ways to raise capital: equity and debt, right? And so venture debt is its own thing too. I actually work in venture debt at a
cool.
bank that does loans to startup companies. And so a lot of the things you're saying about how like these VCs are going to be critical, they're going to analyze it, like this is what they're going to look for, and they're going to be very strict. It's a whole nother level when it comes to a bank, right, with its risk tolerance being a lot less than a VC fund or angel investors. We see startup companies with tons of VC backing. They've already done the hard part. They've already gotten all the VC investors on board, and yet they're just not ready for debt. Or there's just no good reason for us as a bank or for a different bank to give them a loan. And part of it is like venture debt as a market is probably a lot smaller than venture capital because most of the capital that is being raised by startup companies is and should be equity, right? Early stage companies, high risk, and it's yes, debt is cheaper, but it doesn't make sense to raise debt early on, only when you're ready, right? So it's like you don't see startup companies raising debt until they get to like A or beyond.
Yeah, and that's the major problem. So venture debt, there's a whole bunch of other ways. They'll take warrants in your companies and others. And you're absolutely right. There's a lot of different ways for capital. In fact, maybe venture isn't right for you, and that's totally fine as well. But to your point, and this is a good one, I think, venture debt, and especially banks, because they're super risk averse, they don't do anything until you've already had traction. And generally it's revenue, right? So it's like, oh, you have $10 million? Cool, I'll loan you $1 million. Right, so it's because they're very, very risk averse. So when you're talking about earlier, though, that's why the whole venture ecosystem really came about. It's a lot more risky and there's a lot less options. So it's basically some rich person who basically said, okay, I'll give you some money. I believe in you. Go build what you said you will. There's some things around like the types of stuff, convertible notes and safes and all that, which I don't really like getting into because it's not that interesting. But I'm also happy to answer any questions around that as well. Yes.
So I lead a community of female immigrants called Femigrants. And at Femigrants, I help immigrant women to be connected with investors. And what I see when they ask me to introduce them, I introduce to help them. At the moment I introduce, they miss the opportunity how to pitch, cold pitch, especially in a written way. So I love how you teach founders to tell their stories. This is so important. But do you also help them to guide them how to cold pitch? Because this is so important.
Yeah.
Either they get their attention in 30 seconds or they lose it. And in most cases, I saw very talented immigrant like leaders, brilliant ideas, but when it comes to pitch, they lose it in most cases.
Yeah, so I mentioned I've helped founders raise over $500 million the last 7 years. Most of the founders that I'm helping are exactly that. They have something that's making it difficult for them to raise. It could be that they're actually physically located in areas that just don't have a lot of investors. So a warm introduction from someone who's already in the venture space will help them. It could be that they are generally just someone who doesn't like pitching. I don't like to brag. I don't like to talk about myself. I want to just do my work. And those individuals do need to have someone kind of bring them out of their shell and help them to create a narrative that makes it really easy to understand all the amazing work they're doing. And so generally I can help with that. And so there's a couple of areas, and you're absolutely right. There's a lot of founders that have great companies. We had one instance where the company had great numbers. It was doing very, very well. It's just the way they were telling the story was very, very boring. Hey, I've got this really cool tool. It's going to help developers. And investors were just like, I don't get it, right? And when you change that narrative, I'm not even joking, we changed the narrative, we tried it out on the first investor. They ended up getting a term sheet from that first investor that they ended up talking to. It's just a different way, because you gotta get into the mindset of the person sitting across from you. The investor is looking at ROI, the investor is looking at game-changing innovations that's gonna completely revolutionize something, right? And you need to connect with them somehow. So one of the companies, I've been a founder a couple of times, one of the companies that I had was kind of like an Uber plus public transportation, basically. So I go, oh, have you seen those long lines of people waiting for the buses? The bus is dirty, it's gross, you're trying to get downtown. I can't use Uber every day, it's super expensive. What if you had something in between that makes it easy for you to carpool, right? So that was one of my companies in San Francisco. We ended up raising 2 million. We ended up, we raised 1.5 million. We turned down 3.5 million, and all that took a month, right? And a lot of that's just because we were able to show them this pain, and they see that pain, and they go, oh, and here's who I am, and here's why you need to back me. And there's all this stuff out there, but here's why you need to back me. But yes, that's right. Yeah, I mean, I think there's one more question, but happy to start the fireside chat.
Go ahead.
Hi, I'm Akriti. So based on your experience, I'm curious to know if there are certain trends that are underhyped or overhyped from an investor point of view.
Oh, this is where we're getting into some of our questions. Yeah, so one of the things they said is very, very, it kind of resonated with me. They built that, and how long did it take you guys to build it? Yeah, a week or two. So how much of a moat is a week or two of your time? I know you're hard workers, believe me, I know you're hard workers. But if it's a week of time, someone else can build it in at least a week, maybe less, right? So that's not the moat, right? That's not gonna stop someone from doing it. So what's kind of the real moat, and how does that impact what ultimately investors invest in? Everyone sees the news of crazy rounds. The biggest round ever, OpenAI, Anthropic's gonna announce something soon. They just raised, and they were like 5 times oversubscribed, and these huge rounds. Why are there so much money getting tossed into those, and you got just thousands and thousands of startups that are trying to get like $1 million and can't get anything, right? The issue is, quite frankly, I see every single day, and I don't think I see that many deals, startups that don't have any moat. And they're coming and they're saying, hey, I need funding. It's like, of course you need funding. Someone can build that tomorrow, and there'll be another person. So we were talking about, you're backing the person. Yeah, I'm backing the person, but also, if this product is going nowhere, I'm gonna wait until you come to me with a better idea, right? So there's a lot of these wrappers around kind of AI, simple things that quite frankly just don't have enough of a moat. And until you've got something that makes it difficult for someone to replicate it, or something that no one can do except you, the investor is not going to invest. So you just got a lot of these types of AI startups that are solving small problems, not big enough, that are solving problems without a moat, that are doing things that are just like someone else can do it, or they're the wrong person doing the wrong thing. And there's a lot of that. And then you've got people who are building like these really big things, but they have some strong moats. The number of users already on ChatGPT, right? The technology that took many years to build, or the AI engineers that Meta is tossing millions of dollars at, right? They have something that makes them uniquely able to create and deliver and launch something that you and I could not with using ChatGPT. So we're seeing a lot of those things, and it's kind of a huge difference, right? Huge, massive rounds, and then just a whole lot of nothing, and then just a few that are in between. Okay, that's, yeah, because I think we're going to talk about that.